Well, it's time now for some of the day's business news. In an extraordinary show of support, some of America's largest banks came together to rescue an embattled mid-sized bank in San Francisco. That comes amid days of turmoil in the financial sector. Yuka Roye is here to tell us more. Good morning, Yuka.
Hey, morning, Alison. Well, it's really a concerted effort to stave off a larger financial crisis and to reassure the world that America's financial system is stable. Now, in a move led by US Treasury Secretary Janet Yellen and the chief executive of JP Chase, Jamie Dimon, 11 of the country's largest banks, including Bank of America, Wells Fargo and Goldman Sachs, will each deposit at least $1 billion into First Republic to shore up its liquidity. Over the past week, the US banking system has been shaken up by the collapse of 3 regional banks triggered by the failure of Silicon Valley Bank. Like the SVB, First Republic, the 14th largest bank in the US, holds a large amount of uninsured deposits. Antonio Carrigan has more.
It's a solidarity move from the banking sector to a comrade in distress. $30 billion to First Republic Bank, courtesy of 11 Wall Street giants who fear the failure of Silicon Valley Bank could spread into a sector-wide crisis if investors and the public lose faith. The chairman and the CEO of First Republic penned a statement calling the injection of liquidity a vote of confidence for First Republic and the entire US banking system. Lack of liquidity was what forced SVB to quickly sell off assets at a loss, causing share prices to plummet and a run on the bank. And it's what the 11 institutions, Bank of America, Citigroup, JP Chase, among others, want to avoid. With a wealthy clientele, 70% of accounts were over $250,000, the limit for insured deposits, meaning a high risk customers might bolt, and loss of confidence in the sector is what banks and regulators fear the most.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them.
Despite the bank-to-bank bailout of First Republic, shares still fell 17% in extended trading on Thursday.
Well, First Republic's shares, which had plunged nearly 70% in the space of a week, soared after the rescue plan was announced to close up 10%. But they started declining again in after-hours trading, indicating that concerns linger on. Now, as we heard in that report, the US Treasury Secretary reassured markets and people that America's banking system is stable and sound. She did warn, however, that not all uninsured deposits will be protected in future bank failures. Now, the government moved quickly this week to prevent bank runs, panic spreading throughout the sector, but investor confidence is still shaky and questions remain as to why regulators couldn't detect the underlying problems earlier. Here's one trader speaking.
Is that a long-term solution? I don't think so. Are there other companies that have exposure to the bigger systemic problem? Very possibly. I think we're going to have to examine the regulations, what's going on under the hood of all these banks to see, because I figure if they did some investment strategies that were questionable within a higher interest rate landscape, perhaps some of the other banks are doing that too.
Well, the crisis also exposed the impact of rising interest rates on financial institutions and had taken increasingly risky decisions during years of cheap money. Silicon Valley Bank took billions of dollars in losses in a fire sale of its long-term government bonds, which had been issued when interest rates were low and thus lost their resale value. This raised questions about whether central banks will have to slow down the pace of rate hikes, but for now, the message appears to be that their priority is to keep inflation in check. The European Central Bank raised rates as expected on Thursday. The half percentage point hike put the key deposit rate for the Eurozone at 3%. Inflation in the area was 8.5% in February, still far higher than the ECB's 2% target. The US Federal Reserve is also expected to announce another rate hike next week. With that, let's have a look at how all this has impacted markets today. In Asia, major indices are all up today, taking a cue from Wall Street. Tokyo and Hong Kong, as you can see, both rising more than 1%. And that's it for business for now.
All right, Yuka, thank you very much for that business update. That's Yuka Roye from our business desk.